You've been handing over hundreds of dollars every single month, and the wild part is, you probably had no idea you were overpaying. Insurance is one of those invisible line items that quietly drains your wallet while you're busy living your life. And for years, that's exactly what happened to me. It started back when I first signed up, young, maybe a little naive, and just relieved to have coverage at all. I grabbed the first policy that made me feel protected, signed on the dotted line, and basically forgot about it. And that, right there, was the first expensive mistake. The insurance industry is built on something called inertia, which is just a fancy word for the fact that most people never switch, never shop around, and never question what they're paying. Insurers know this, they price for it, and they quietly count on your loyalty to fund their bottom lines. Think of it like a gym membership you forgot you had, except instead of $40 a month, we're talking potentially thousands of dollars a year evaporating into thin air. The system isn't broken. It's actually working exactly as designed, just not in your favor. For years, I watched my premium creep up at renewal time, 5% here, 8% there, and I rationalized every single increase. I told myself it was inflation, it was the market, it was just how things work, and none of those excuses were completely wrong, but none of them were completely right either. Here's the behavioral economics behind it. Humans feel the pain of loss more acutely than the pleasure of gain. So switching feels risky, even when staying is clearly more expensive. Researchers call this status quo bias, and insurance companies have quietly built entire business models around exploiting it. The turning point for me came when a friend casually mentioned he was paying nearly 40% less for comparable coverage just by shopping around during renewal season. I remember feeling a very specific kind of foolish, not catastrophically embarrassed, just the quiet, simmering kind that makes you want to do something immediately. So I did what any reasonable person does when they realize they've been financially asleep at the wheel. I spent one Saturday afternoon actually doing the math. What I found was that over roughly 7 years, I had overpaid by an amount that could have funded a solid vacation, a meaningful investment, or at minimum, a truly ridiculous amount of tacos. Historically, consumers who shop their insurance every 2 to 3 years save an average of $300 to $500 annually on auto policies alone. And homeowners can save even more. The data isn't subtle here. Loyalty in insurance rarely gets rewarded the way loyalty in other relationships does. The misconception most people carry is that switching is complicated, risky, or somehow dangerous to your coverage. In reality, with a little overlap planning and the right broker, a policy transition can be seamless, gap-free, and genuinely painless. The monster under the bed turns out to be a very small, very manageable errand. The practical playbook is simple. Pull your declarations page, benchmark it against at least 3 competing quotes, and don't be shy about telling your current insurer what you found. Sometimes they'll match it, sometimes they won't. But either way, you've shifted the leverage back to where it belongs with you. Discipline here isn't about being ruthless or disloyal. It's about treating your own money with the same seriousness that companies treat theirs. Set a calendar reminder at every renewal, treat it like a quarterly review, and approach it with zero emotional attachment to whoever currently holds your policy. The philosophical truth underneath all of this is that financial health isn't usually built through one dramatic moment. It's built through dozens of boring, disciplined, unsexy decisions made consistently over time. Correcting an overpaid insurance policy won't make you rich overnight, but keeping that extra money in your pocket year after year absolutely compounds into something real. I'm genuinely comfortable with wherever you land on this, whether you stay with your current carrier after negotiating or walk away entirely. The win is in the awareness and the action. What matters most is that you stopped being a passive participant in your own financial story and started being an active one. And if you're ready to take that same energy into bigger financial decisions, whether that's real estate investing, home contracting work, or finding the right lenders, check out our links in the description below because we can help you get started.